As the government teeters on the brink of a shutdown, investors are left wondering, will their portfolios withstand the chaos, or is it time to brace for impact? Join us as we dive into the potential effects of a government shutdown on your investments. Welcome to our channel, where today we're analyzing a critical question for investors. What happens to the stock market if the government shuts down? With the market's impressive performance this year, the looming threat of a shutdown raises concerns about potential downturns. We'll explore expert insights and historical data to give you a clearer picture of what to expect and how to prepare. In this video, we'll cover the immediate and long-term implications of a government shutdown on the stock market, including potential sell-offs and buying opportunities. We'll hear from industry experts who will share their perspectives on market resilience and how previous shutdowns have played out. Most importantly, we'll give you strategic insights on how to manage your investments during uncertain times. The United States is on the brink of a government shutdown, raising concerns among investors. Despite soaring market performance amidst economic headwinds such as inflation and hiring slowdowns, the looming shutdown presents a potential volatility trigger. Historically, government shutdowns, which have occurred 20 times since 1977, average about 8 days and rarely spook the markets for long. Analysts underscore that a short-term shutdown might have minimal impact on the markets, indicating that investors often expect a resolution given past experiences. However, the current economic backdrop, characterized by inflationary pressures and recession fears, makes the situation more precarious. This makes a prolonged government shutdown a possible threat that could unsettle investors and drive down stock prices, despite recent gains of 9% in the Dow Jones, 13% in the S&P 500, and 17% in the tech-heavy Nasdaq. A protracted government shutdown could be particularly disruptive at this time, some analysts suggest. If the shutdown extends beyond the typical duration, it could exacerbate existing economic concerns and lead to a significant market downturn. Market strategists like Brett Kenwell from eToro warn that prolonged uncertainty is what markets dislike the most, as it could weigh down equities, potentially resulting in a downturn of 5% to 10%. Additionally, rising inflation combined with weak hiring, as noted by Federal Reserve Chair Jerome Powell, already presents a challenging situation. Thus, the uncertainty arising from a prolonged standoff in D.C. could magnify concerns amongst investors who are acutely aware of the current economic vulnerabilities. Interestingly, past shutdowns have not directly caused recessions or market crashes, offering some reassurance. During the last major government shutdown in 2018, the S&P 500 saw a notable increase of over 10% despite the extended 35-day duration. Analysts like Callie Cox from Ritholtz Wealth Management propose that while the market may initially react negatively, any significant sell-off could represent a temporary dip that savvy investors might exploit. John Stoltzfus of Oppenheimer Asset Management suggests looking for high-quality stocks that are undervalued as a result of panic selling. These brief market pullbacks, he argues, provide opportunities for thoughtful investors to purchase strong contenders at advantageous prices, thereby transforming temporary market fears into potential long-term gains. To sum up, while a brief government shutdown may not significantly impact the market, a prolonged one could lead to sell-offs and increased market volatility. However, this might also present opportunities for savvy investors to acquire undervalued stocks. Historical trends suggest resilience, but as always, the market's response is unpredictable. Stay informed and prepared. What do you think? Are you prepared to absorb the shocks of a potential government shutdown? Or are you planning to adjust your investment strategy in response? Let us know in the comments below, and don't forget to subscribe for more insights into navigating market uncertainties.